What are trading strategies? There are hundreds of different trading strategies used today all over the world. In this video, we will help you understand the basics of financial market analysis. Trading strategies are based on signals that help to make trades. These signals depend on the method you choose for market analysis. There are four basic methods of technical analysis: candlestick analysis, working with power levels, computer analysis, and news trading. In candlestick analysis, the main focus is on candlestick combinations or patterns. A combination usually signals a trend reversal or its continuation. Power levels are specific spots on the chart where the price may stop moving and reverse. For example, levels of support and resistance that mark historical and local extremes, trend and channel lines on the chart. There are two types of trading strategies using power levels: breakout and rebound. Computer analysis is based on generating signals about the advisability of buying or selling certain trading assets. In other words, trend indicators. With them, you can quickly analyze the situation and make timely decisions to open a trade in the right direction. The market reacts to significant news. Depending on the significance of the news, the price of the traded asset can change after its publication. The news trading strategy is considered quite risky, but it allows you to make a significant profit in just a couple of minutes. Any trading strategy you choose requires more detailed study and developing practical skills on a demo account. Happy trading!